Hi, this is Cale Smith of IIM Investment Management, and this is a voiceover of the slides I presented to my investors at the fourth annual IIM Investment Management Annual Investor Meeting. The meeting this year was held on May 18th, 2013. I'm recording this after the fact here in early July. So there are going to be a couple of slides in this presentation that follows that have changed. More specifically, those slides when I show the current holdings in Tarpon and Gecko. I made some changes between what you see here and what are in Tarpon and Gecko now. We saw a couple of days of really nice panic in the market right after that last FOMC meeting, and I tried to capitalize a little bit. But not really material for the purposes of doing this voiceover. I'm also sort of in the process of still making some of those changes. So the point being, I'm not going to talk about those publicly yet, and we're just going to stick to the script on this thing anyways. So let's do it. This is easily my most expensive slide. And we'll segue pretty quickly right into a little bit of a snapshot of IIM compared to where we were last year. Again, in August will actually be the 5th year that IIM has been around. Right now, or at least in mid-May, had 16.1 million assets under management. You can see the number of investors there, almost 200 accounts, and folks in 16 different states. My goal when I started the firm was by the end of year 5, which it will be essentially the end of this year, to hit 20 million in assets, and it looks like we're going to do that. So that's, I guess, personally gratifying, and also enjoy telling you all that. As far as the lower right-hand corner, IIM is still in Monroe County, anyways, the only fee-only firm, and while it's probably part of a much larger, broader discussion, that does mean, among other things, that I've taken a fiduciary oath. So there's one firm in Monroe County that is a fee-only firm, and that is yours truly. Been an exciting few years for IIM, and it's about to get even more exciting. One of the biggest changes, really, since I started things is going on right now. And at this point in the actual annual meeting, I asked Loretta Reeves to stand up. She is going to be a new portfolio manager here at IIM Investment Management, which I am just thrilled about. Loretta, she goes by Retz, first of all. I'll give you a little bit of a bio. You're going to be hearing a lot more about her, both from me and herself directly down the road a little bit. But yeah, kind of a banner day at the firm. Retz was, for the past 17 years, serving as co-chief investment officer of the value team at a very large mutual fund company, Hansberger Global Investors, up in Fort Lauderdale. She was a portfolio manager there, a senior research analyst covering the healthcare space, and long story short, has managed billions, that's billions with a B, in the past. I believe her most recent fund was about 700 million that she was managing. Been an Islamorada resident for a few years now, but was just traveling essentially to Fort Lauderdale and back every day commuting. So thrilled to have her horsepower on board. She is a CFA charter holder. She also holds the designation of AWMA, Accredited Wealth Management Advisor. And for the purposes of you all, the investors, I guess I would let you know that she is from the Templeton School of Value Investing. And if you don't know much about John Templeton, we'll fill in the blanks over the course of the next months and years. But essentially, John Templeton was a pioneer in the use of globally diversified mutual funds. So his bread and butter was really in international investing. He is, by many accounts, and I think it was in the late 90s even, that Money Magazine called him arguably the greatest global stock picker, of the whole century. So Loretta was, quite literally working at the desk right next to John Templeton. Before she was at HGI, she was a senior VP at Templeton Investments, and learned the trade really kind of at the elbow of the master, if you will, in terms of international value investing. So, again, could probably talk forever. I probably talked more already now on this voiceover than I did at the annual meeting. But the point is, thrilled to have Loretta on board. You're going to be hearing more about her soon. And also happy to announce that on the 1st of July, she launched the Frigate Folio, her own spoke fund here at IIM. Frigate, and that's Frigate, as in the bird, is an international value fund. You'll be hearing more about that very soon. Be opened up for investors before too long. And she's also working on an international dividend fund. So anyways, a lot to talk about, a lot of changes at IIM. And from the perspective of investors, I think what it really brings to the table is another value philosophy that's a little bit different than Buffett, but for your purposes, that's great. You get both Buffett and Templeton, I feel like, or at least those philosophies, all right here. So big deal, and thrilled for Loretta to be joining us. I think I mentioned already, Loretta is going to be launching her own 2 spoke funds eventually. They got the first one, Frigate, up and running. IIM is still very much a spoke fund shop, and I'm not going to spend a whole lot of time talking about spoke funds in this particular meeting. We've done that in years past, but the point is, really everybody's in it together. Your portfolio manager has a significant portion of his or her own net worth, and this applies to Loretta as well, in the funds that she manages for everybody. All right, cruising right along. These are sort of the numbers everybody comes to see, I suppose, although it's no mystery by the time you get here. Year 4 in both Tarpon and Gecko were pretty good years for us. Those are the numbers, and it gets a little bit wordy trying to explain the performance on a calendar year basis because neither Tarpon nor Gecko were launched on a calendar year basis. But that aside, the Tarpon folio is up 30%. It was just shy of 30, 29.7, but rounding up, we'll call it that. Over the same time period, the benchmark S&P 500 index was up 17% last year. Gecko was up 22% over its reporting period versus 16% the S&P 500. All those numbers are after fees, they are pre-tax, and they both presume all capital gains and dividends are reinvested, which is it's a significant amount of income in the Gecko folio. Again, Tarpon is my long-term capital appreciation portfolio, built more for growth. Gecko is the income portfolio. I'd say the biggest stories, and I, my bias is to talk a lot more about Tarpon. Just if you look at assets here at IIM, the vast majority of assets are in Tarpon. So as well as most of my own money, so I tend to obsess about that. Most of this presentation is built around Tarpon, although I will talk to Gecko a little bit in a few more slides. When it comes to Tarpon, though, the biggest stories of last year, really, and one of the I guess a few of the big reasons we were able to outperform like we did were essentially tied up in 3 companies that we owned. Clearwire, McMoran Exploration, and Dell all announced they're going to be acquired late last fall, sort of early winter time frame, and that clearly did very good things for us in the portfolio. I talked a lot about Clearwire and McMoran at the last annual meeting. Didn't really touch on Dell too much then. But it's almost, I guess, academic at this point. But certainly, we don't own a lot of companies in Tarpon. It is a concentrated portfolio. So the fact that 3 of those, it was probably 16 different companies we had last year. 3 of them got acquired. I guess that speaks to a couple things. Probably a little bit of luck, and also hopefully a little bit of skill, if I do say so, and at least identifying things that are undervalued. There's no guarantees that these things were going to be acquired anytime soon when we first purchased them, obviously, but hopefully it speaks to something positive about the processes I have when we're looking at things to invest in. The other big story of last year was the Euro crisis. The year was significant in the sense that it was the first time, in the last 4 or 5 years that actually ever got defensive in Tarpon or Gecko. And by defensive, I mean for a brief period of time there, we did own some shares in what was essentially an ETF that was short the market. I wouldn't have anticipated doing that. I don't know that I'll need to do it again, and it's far too easy these days to fall into the trap of sort of becoming a macro tourist, if you will. But I'm not at the same time quite sure the general public realizes how close the EU was to perhaps disintegrating, if that's not too strong a word, around this time a year ago. So it didn't happen. And again, it was a hedge in the portfolio, just on the low probability, but still somewhat significant chance that it happened. It didn't, fortunately. We were able to take that hedge off, and that certainly helped our returns last year as well. Quick snapshot here of Tarpon launch, again, the end of November 2008 through yesterday, which was during the annual meeting. That was through May 17th of this year. Again, this is after fees, compares the S&P 500 with all those dividends returned. So clearly have had a good run. Year 5 to date, Tarpon, again, this was through May 17th, the day before this annual meeting. Tarpon was up about 35% compared to about 22 in the benchmark over the same period. So we were off to a good start in year 5 as well. Gecko, you can see that. It's been a little bit of a surprise, I would say. Gecko is built for more income. Launching at the end of January 2009 turned out to be a very fortuitous time as well. Well, I'd like to think that Gecko has done so well also purely based on the brilliance of its portfolio manager. I think the reality in that case is we have certainly benefited from sort of the tailwinds of a lot of other investors kind of chasing yield out there because nobody's earning anything on CDs and the bank accounts. There have been a lot of folks going to the market trying to buy those high dividend stocks. That also show up in Gecko, and we've clearly benefited more than I would have thought we would have seen in a sort of a stodgy, slower growth dividend fund when I launched it 4+ years ago. So still yielding right around that 6.7% mark. So Gecko has done quite well as well. I will probably have more to say about Gecko specifically the end of this year with regards to maybe having some help along those lines. Year 5 to date, Gecko, right up until the last week or two before the annual meeting, Gecko was outperforming the benchmark. Hiccuped a little bit, but still okay with where we are in Gecko this year.